Good morning, traders. It's 8:01 a.m. Chicago time on Tuesday, the 6th of December, 2016. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall stance of the market is mixed to bullish this morning. We're seeing crude taking a drop of about 2.3% to $1.18, $1.19, trading at 50.62 on a January expiration. Followed by the euro, which is down 32 basis points. Strength is shown in the euro stocks and the Russell 2000. Overall, a mixed bag. Mainly equities are higher. The 10-year note is marginal, up, what is that, 2 ticks or something? About 4 ticks. So overall, a mixed bag this morning. The news flow is showing Eurozone GDP was in line, came in at 0.3, and the Bank of Australia warned on growth. There are a couple of charts I want to go over with you today, just some big picture stuff, and we'll get down to the hypos and get down to the to what the trade is expected to do. Overall, looking ahead today, seeing the expectation at 10 o'clock Eastern for durable goods orders. This is the final number for October, expecting 2.0%. Factory orders also at 10 o'clock Eastern, 2.5% expected. IBD tip, economic optimism for December is expected to come out. The prior is 51.4. There's no estimate, and that pretty much wraps up what we have for numbers for today. As far as speakers, not seeing anybody on deck. We also have at 11:30 a 12-month bills and 4-week bill auctions at 11:30 Eastern. So fairly quiet day on the calendar. It is Tuesday. The expectation is for the market to move a little more than it did yesterday statistically, but we'll see what happens here. Let's take a look at what was expected yesterday versus what we got. Here we go. Yesterday we were looking at a gap up at the time of the trader bite. We were opening at 2200. We saw the same in the Nasdaq, although the Nasdaq opened right at the prior day's high, at Friday's high on the dot. The primary hypothesis is for responsive selling back to the high of Friday, and then we were looking for a base, but in either case, we were looking for it to go higher in the session. In fact, Hypo 2 was also looking for higher. Hypo 2 was more aggressive. Hypo 1 reaches down into the prior day's range, so it cuts down on the amount of range going to the upside statistically. Hypo 2 shows the gap zone remaining open and the market making a push, an attempted push towards the 2213 November high. Here's what we actually got. Not this. Sorry, I was doing some research here. I should have closed these. Here's what we got. We got an open gap zone below. So we had Hypo 2 yesterday. We're gunning for 2213. We got to 2208.75 before the market decided to rotate down and go sideways. Once it breached the mid, which is this price right here, this line, it's auto-generated, this blue line. Once it breached the mid, then I was really looking for it to fall back into the opening swing, which of course has moved because I switched computers. There we go. Expected it to go back to the opening swing and to test the other side. It never got there. It pushed down to 21.99 and a quarter, and then remained in the middle. The overall profile is somewhat balanced with this odd-looking, very sharp point of control. Um, that's what we left behind. But overall, it was hypo 2 early on, and then it just went sideways. And that's, I talked about it yesterday. NFP Monday generally has a sideways drift and generally isn't a big pusher. So that's basically what we saw. I wanted to switch gears here for a minute and look at the bigger picture a little bit. Look at what's happening in the composite here. Remember, this is the daily composite. Each bar represents 1 day of trading, RTH only. And what we've done is we've moved away from this massive, gargantuan um, balance zone here. And we've pushed through following the election. This is election day. We've pushed through and we trended up into new territory. And what we've done since is we've created balance on a bigger scale. And the key price in this area is none other than the 2086 even, which we tested on Thursday to the tick, and then again on Friday by just a little bit. So we're holding this point of control area, and you probably noticed that I had a point of control yesterday right down here at 99.5, which we tested by a tick in the afternoon and are stuck in. So what the market's doing, despite its large movement, has since the election put in new highs and has sat sideways. We're in a balanced condition on the daily, and I just wanted to bring that up and make that known that that's where we are. You need to refer back to your composite chart to see what the bigger picture is. We have a fairly blunt area here compared to where we were, so you can see the volume is fairly light here. This area is not all that well traded. But overall, we remain battling in this key point of control zone for this upper node. Now, what does this mean? What does all that gibberish mean? It essentially means that if we break through this 86 area, this is a key over underline right now from a volume profiling perspective. If we break through this 86 and we start to drift down, then we start to hit the points of control that are just below us, with the key target being the MC point of control for this whole area, which is what? 2152.50. So a break below 86, a meaningful break, meaning lots of pressure on the sell side, and the market sustains selling, which it has had a hard time doing for quite some time now. Will likely take us down to 2152.50. If you are an options guy, an options trader, then you'll probably want to look at that trade once it breaks through. And so that's the bigger picture view here. We are just chopping back and forth. We do have a gap zone beneath us, which I'll add to our flex levels, and it'll show up for today here right after the trader bite. And then on the weekly, if we look at what the process has been on the weekly MP chart, which is right here. So if we look at the weekly MP chart, we are one-time framing up. We've been one-time framing up, and we continue to do so. We're very bullish on the weekly still. Oops, lost control there. So you can see these lows, higher lows. God, that is just awful, just awful. Here we go. Higher low, higher low, higher low, higher low, and higher low. And I'm really waiting with bated breath on the breach of this weekly low so we could see a quick move back down to 2152.50, and we have not been able to do that yet. We're still holding on to the upper end of the weekly. This is last week. You can see that we put in a lot of volume on the high side. The thing to note about last week is it's very boxy. So there was no real consensus on price last week. We traded thoroughly all the way through, as opposed to, for example, this profile over here, where you could see there's consensus there from week to week, and then the points of control are inside of each other, which means that it's likely to break one way or another. In this case, it broke lower and went and tested a weekly point of control from a prior era back in July. And so this here is saying that we don't have both sides are active, both buyers and sellers are active at a large over a large number of prices, which means that there's really no consensus on price, and price discovery is likely to continue, but not as aggressively as it would be if it had multiple weeks or multiple days of um, stacked points of control. You know, when you have compression, point of control over point of control over point of control, you generally have imbalance coming, and you should be prepared for a pretty large trend day. This sort of thing here, when we have a profile that is thick all the way through, meaning it doesn't have a clear consensus, it's likely to be a murky trade and trade back and forth with both sides active. And I'm seeing that across my order flow software and other areas that it's not able to move away in a sustainable way. The overnight session shows a complete balance in the overnight. The overnight volume is pretty light at 151,000. We attempted to push lower, and we hit basically yesterday's value area low with our low overnight, but it's trending higher and it's trying to regain territory from yesterday. So leaving us with an odd opening consensus. So overall, the volume, the overnight inventory in terms of volume is flat. The overnight inventory in terms of price is bullish. So the expectation is for a slight return to a slight return lower, slight responsive. The expectation is for it to open and respond early and push down into this 2205 area. And then I'm looking for it to again resume its attempt to push towards the 2213. That would be hypo 1 today. So responsive and push higher, same as yesterday. If it fails to do that, if we open, push up, and find ourselves back in range, then we're likely to test yesterday's point of control, and we're likely to retest this point of control below right here at 2200, 2199.50. That would be the second hypo. Okay. Those are the two key scenarios for the day that I'm expecting. That's a cute little two in a circle there. That's what I'm expecting for today. A reminder before I head out here, let you go. Two things. One, please hit the like button before you head out. Subscribe to the channel so you can get notifications when videos are released without waiting for my tweet or whatever. And then the other thing is we have a webinar next Tuesday on order flow scalping or initiating trades based on order flow given a plan. That's going to be a pretty good amount of information shared there. Hope to see you there. The invitation for that will go out today. If you want to be notified when the invitation goes out, just add yourself to the mailing list. We don't spam anybody. The link for the mailing list is in the description of the video that you're watching. Appreciate you listening in. Take care and good luck today.